Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, and this is the 13th of January, 2020, and the time right now, getting on to 5:30 at this hour. I want to make an announcement to everybody. My SPDR ETF video is now ready for those of you that are a member of my research. So if you're a member and you have your member login, go to our website. Under member login, put in your user ID and password. When you get to the video section, you will see that the SPDR video is there. Now, I only did half of one today because I'm working on my timing. I'll check it and see if people have anything to say about it. But I got quite a bit done. And they're all done. Tomorrow you're going to get a full video. I just wanted to do that to get our feel for it and work out what little kinks we have behind the background. But I said I would get this done. It is there. It's going to be exciting. And I think you're going to really like it. If you're a stock SPDR or ETF trader, I'm covering all the different sectors for you. So you've got an energy sector, you will have an FXE sector, in other words, foreign exchange sector, you got oil services, oil sector, the TLT is covered. And I want to remind you, when this goes live for subscriptions, I will be taking out of the current videos that you have any of the SPDRs or ETFs in them and keep them separate in that particular video. So I think you're going to like it. I'm having a ball doing it. And I'm going to be adding another end of the day video where I cover generically some of the key different markets for you on just the SPDR ETF one. So that should be fun too. So where are we? Well, this is the week that we're supposed to see Ms. Pelosi, Speaker of the House, deliver the articles of impeachment. From what I read, I think it was the president was impeached December 18th or something. So she's held them for a number of weeks, and she's gotten nowhere with the negotiation with the Senate. The Senate says that they'll make very quick order of starting the trial. I doubt that they will. And the reason I say it is I think they first are going to get past the big event for the president, which is the signing of the U.S.-Chinese trade deal. I would think it's in very bad taste to start a trial while the Chinese delegation is here. You might as well wait. She can deliver all she wants. What's another 48 hours? I don't see that as a big event. Give the president his day in the sun. Forget politics. This is about America. I hope the Senate doesn't just waste its time on this impeachment and deals with the USMCA deal also. So this is what's behind the stock market. It's got to be scratching its head saying there are good things coming in trade, and I think the market is now doing that. The fear I have, it's one fear, that buy the rumor, sell the fact. Are we going to see any of that in the market? On the energy market, while you're up tonight, remember, these are all tonight's early prices since we opened at 5, you fell pretty hard in all the energies today. Are we far enough down where we find a floor in the market, so to speak, at least a trade bottom? Bonds and notes, pretty quiet right here. I've moved to the April gold, just so you'll know on that as well. So on the S&P, up another 26.5 points starting the week out. New all-time highs. You know, nobody applauds it. I am. That's quite a dramatic move already that the market's seen since August. I mean, unbelievable. I'm just leaving that August correction there because it's hard to believe the market's up almost 400 some odd points. When you take a look at a daily bar chart, this was missile day. And that's what I'm going to label it for myself, missile day. So missile day happened, the market cleared that high, and it hasn't looked south on even a one-day correction yet of any meaning. When you take a look at what the chart's done, you can see that you've got a lower low and a grinding higher high pattern. It's just one that moves and it's not letting traders in. The money that got placed after the first of the year was in here, and if there's a big break, I wouldn't be surprised if there's money waiting again for the market. But what's a big break? Is that 5%? Is it 10%? I'll leave that up to the traders. In terms of where the market held, you can't get away from the fact that each break recently to the 18-day average of closes has been within a 48-hour period. You look back at it and say, darn it, that's where the money came back into the market. That's what you're seeing in this particular thing. You're at the upper Bollinger Band. It's a resistance point. You don't forget this. You don't get caught in the euphoria. That is a resistance point for the market. There is no trend. The market on missile days got itself annihilated there. It's come back, but it hasn't been able to set up a pattern of higher lows, higher highs just yet. But this is taken over. Slow stochastics. Now, what's the rule? When you get an embedded reading, reading requires the red and the blue lines to be over 80, and they got to do it several days in a row. Once that has set itself in, you're looking on pullbacks for the smart money, quote unquote smart, to be a buyer on breaks. Now, I cover in my morning subscriber video where that first entry point is. I'm also always concerned with an outside day. Outside day being where you first make a higher high, then break through that low. But until you lose the embedded reading and keep it lost, the odds of the market are that it's going to stay strong. If you lose it, then I look for the 18-day average to be hit. In the NASDAQ, same thing. Bingo. And by the way, in my ETFs and my spiders, I covered this tonight for you, and I go through with the stochastics and everything, just like my morning subscriber video. That is the one where I'll be saying I want you to buy here, sell there, for those of you in spiders and ETFs. But the market down to the 18-day average re-embeds and just churning itself higher. The Dow, well, do we have an embedded reading here? So let's see. The market right here did not have both numbers over the 80 level. Next day, not over 80, not over 80. That's today. So the answer is no. You have an overbought market that's narrowing in on solid resistance at 28,983. It is not embedded. So this has not got the power of the NASDAQ and the S&P, and certainly the Russell doesn't yet. Now the Russell is narrowing in. So price has a tendency to get rid of volatility, narrow in, and churn. And it's like a time bomb. Eventually it explodes out of that one way or the other. Which way? Don't know. As of tonight, still don't know. I have a higher high, lower low pattern. What the market is trying to do is get up and over the highs that were made today, Monday. Remember, in Tuesday's session, 1672.20 was the high, and early on tonight, 1671.80. But if you can clear that, at least then I have a pattern of higher lows, higher highs for that moment, and it could lead to another challenge of the upper Bollinger Band. If you don't do it and you break down, then the lower band is still the support zone. Either way you go, you're not embedded. In the VIX, where did the market fail again on the rally? Remember, we talk about this line in the sand, that 18-day average. That is the demarcation point of bullish bias, bearish bias. And when a market is under it, it often will rally to it to figure out what to do. When it's over it, it'll break back to it to figure out what to do. That is your neutral zone. And today you went up to it. Now, if you take out today's lows tomorrow, you keep the bear trend going with lower highs, lower lows. The negative is you're oversold, not embedded. You haven't embedded in the slow stochastic since way back here in the September time frame. So it's just something to keep in the back of your mind. This doesn't embed very often. So whenever it gets oversold, to me, it's a warning sign. Looking at the stock indices, are they going to be able to keep themselves bullish? That's typically what happens. In the bond market, we have a pattern of lower highs, lower lows. So the trend is defined by the swing line went bearish. It's countered because the market's trading over the 18-day average. Again, that gives it bullish bias. A close under this number turns the chart bearish. Momentum flat, not giving you an indicator. In the 10-year notes, we went bearish today. Lower highs, lower lows. Just like the bond market, the bias is up. So you have no resolution of the market. You're going fairly flat on momentum. TLT, you have higher lows, but lower highs. So you're narrowing in like that. Don't be surprised if you play around this 18-day average. You've got a resistance point at the upper band, support at the lower band, caught in the middle of no man's land. In the dollar index, the pattern is still bullish. Higher lows, higher highs. If the market can extend that, It maybe the 100-day average gets into play, the 97.36 level. I say if because you're already in overbought territory. Last time we got overbought, the market nosedove. I'm not predicting a break. That's not the call of momentum, but it's warning sign that the market's getting into an area that's a little rich in price. In the eurocurrency, trouble for this market seems to be this 18-day average. When it got over it, it stayed over it and played with it. Now that it's under it, it seems to try to get up to it, and it's having a hard trouble with it. On the daily chart, in order to get bullish this market on this pattern, there's nothing here. Even if you went through this high, you'd have a lower low, higher high. So the bears have control of the market for the time being at the 111.93 area. The bears have to defend that, but support, trying to get it through this 100-day average. When you get a couple of days under it and you pull back to it, it's off an area that the market wavers. In the British pound, bearish. You know, we got word last week from Mark Carney that the economy's in trouble and his successor is probably going to end up with an easing cycle, not a tightening cycle. He sort of gave you what the rundown is. Now, the numbers that are coming out of the UK, and we saw data today from their stats bureau, were bearish. And the market still got lower highs, lower lows, very oversold, not trying to embed yet. Between here and the lower Bollinger Band, the 129.50 area is the first support. This is passage of Brexit. It all has been given up. You're down over 550 points since then. Missile day in the Japanese yen. You know nothing else. You know that you're always cautious between the upper Bollinger Band and a 100-day average. Market got up there, outside day down. That was your peak, period. And now the question is, those people caught on the bail. Now, think of what's going on in the world. Something of a detente between Iran and the U.S. temporarily. The signing of the U.S.-Chinese trade deal. The U.K. is talking to the U.S. about a trade deal. The negative is Europe had better get on board and do something. Otherwise, I was reading today that your bottle of champagne is going to double in price. They're going to 100% tariff, all those French luxury goods. And this president doesn't play around. So it's time for them to talk. Well, in the end, though, that's not war of anything other than economics, and there's better things happening than negative, and the market is showing you that it's feeling that pressure. Is this enough of a break? Well, you're oversold. You don't have to hit the Bollinger Band, and if you do, you're playing from here for another 18 points. I wouldn't be surprised if some of the smart money's taken some money off the table. In Bitcoin, we have the higher lows and the higher highs. Now, the event that's at hand is the halving. I call it halving. They call it halvening. And that is when, coming April, May, I don't know, I forgot the exact date because I'm not a follower of all that, but what I do watch is the algorithms that create these Bitcoins get cut in half. Now, that does a couple of things. Number one, do you want to be a miner at those prices, or is it easier to buy the existing coins? The idea of having them is that the idea is that those that believe in this type of investment will buy because there's going to be fewer supply going forward. Okay, so if it's a game of just supply and demand, I get that. I'll let you believe if you believe in the cryptocurrencies or not. That's not my call here. The chart is bullish. The upside resistance is the upper Bollinger Band, and you're in overbought territory. Brent versus WTI. Contra to everything else I said about Missile Day, where you lost the yen, where it's in a straight down pattern in other markets, okay? This is not. The premium here has stayed very steady at a $6 or so difference near the recent high of the differential between Brent and WTI crude. When you look at the Brent, we've been falling and falling hard from the $72 area. You're down roughly $7.50 or so. You're into oversold territory. I don't know if you can get to that lower band or not. And I don't know if the smart pros are going to push for it. You're in a zone that between here and 63.5 is where I'm looking for the support to come in the lower Bollinger Band. The way the Bollinger Band acted as resistance here, I'm going to look for support down there. WTI is already there. It's riding it. Now, tell me there's more to it. I want to see it embed. Both numbers are not under 20, and you got to get them under 20 for several sessions in a row. You're just not there. So I'm looking at between this Bollinger Band and the 100-day average is the potential support zone. This is a weaker market, and it should be weaker than Brent because it's not the one that's been threatened. When you come to the gasoline market, and by the way, tomorrow I am putting out a gasoline report. So you will get my new video report as the metal one's coming off, gasoline is coming on. I've already lined up the charts. I'll record it first thing tomorrow. So I have nothing to do but talk. And I already know what I'm thinking. But lower highs, lower lows, down to the Bollinger Band. I'm looking for support against that number. The market's down through here. And I know it's hard to believe, but starting at the next week in January, you start getting the buys that come in on a seasonal basis. That doesn't mean gasoline has to follow seasonals. If all seasonals worked, the richest people in the world would be those that just follow seasonal trades. It doesn't work that way. Past performance is never a guarantee of future performance. But it's an idea what the refineries do and how they start getting themselves ready for the spring-summer season. And I just question, are we getting down to a cheap enough area? In the nat gas, the polar vortex that was hoped to come out of Canada, from the Arctic through Canada, is apparently not going to do that. But we're still cold. And the weather, we're January 13th. It's been so mild that we get spoiled. You're in a short covering rally at this point. The market's having great trouble here at the 216 level. If it can pop, the 223 level could be a target. The trend is up. The bias is not. The market is at 215.70, under the 18-day average. They're fighting each other, and the market's gotten out of an oversold condition. In terms of overall market supply-demand, big time still, too much supply on that particular market. I want to remind you about my research. Now, you know I'm putting out the ETF Spider video, and for all of you that are paid subscribers, you can go to our website under Member Login on the website, click it, you'll be able to watch the video. I put up about half of the size that it's going to be tomorrow. You'll get the full-size video, and they'll come out shortly after 3 up to 4 o'clock is my goal, the time to get them out for you, which means I got to do some of these videos in a more timely basis. I don't want to be here all night. Remember, I write about the markets, and my commentaries, you'll discover, are just like for the stock indices, the sectors we're doing, the ETFs. I cover a lot of this, and I've covered it anyways. And then you get the chart action as we go with it. How do you find out more about this? Well, number one, if you haven't had a trial to any of my research, it's probably as good a time as any to sign up at www.iraepstein.com. Remember, the gold report that is up there comes off tomorrow. Remember, I'm going to have a new report coming up in gasoline. Again, it's www.iraepstein.com. On the research, you can click up here to get that page as well. You have a good night. I'm Ira Epstein.